Hey guys, welcome back. In today's video, we are talking about the liquidation, hedge fund selling, why we are close, and many more in this video. Firstly, you can see this. Liquidation event confirmed. Personally, I expected a relief rally today, but seeing institutions selling hard is something we haven't seen in a while. It's a sign of conviction on more future gains in stocks from the levels reached had been significantly undermined. So this is going back to what Dario was saying previously, and something that we have always obviously been talking about on the channel is looking at we are clearly in a liquidation event when many assets, especially risky ones, correlations start converging. And so this is where we have been looking at. When you look at the overall market and when you look at this piece of news, you see what is happening. Breaking, hedge funds are selling stocks at a pace not seen in years. And Big and Steve replied to the same. Now, when the banks do, we all smile. So when you take a look at the overall market condition, what we are seeing right now, when you pair it up with the VIX going up, when you pair it up with all the collaterals falling, is that it is not in a good situation. We are going to be seeing, again, the market just really being sold off. And this is having many effects. One of the biggest effects we obviously talked about and have been covering for the last few days is obviously talking about the collaterals situation. And we talked about how hedge funds and these institutions, along with the banks, will suffer because this is relating to the fire sale of assets that we have always been mentioning. And so this could potentially be what ignites, what starts this whole kind of theory that we've always had about how we are going to see the trigger of AMC and GME to be squeezed as we see all of these institutions, all of these short hedge funds, all of these banks going to be losing out money when we see the whole market collapse. Remember, because the fact they're selling, they are not being in a good position. When we take a look at hedge funds, we know they have to borrow money. We know their revenue is going down. We know their profits are going down. We know that their debts are actually going up. The same with banks as well. We know that right now the commercial real estate loans aren't going well. We know that whilst they are posting that they are realizing profit, their unrealized profits are that of in the hundreds of billions of dollars, and along with the derivatives positions, which are in the $1 trillion area, you understand why this is a massive situation and why everyone is keeping a close eye to this. And so what we're going to be seeing is, of course, the continuous mass selling of stocks, likely to be a mass decline in wherever you're looking at the indexes or individual stocks. And that's going to have a massive, of course, impact on the collaterals, and therefore the shorts won't have that capital to obviously suppress AMC. You can also see this. The pieces are falling into place. Nasdaq shutting down high-speed frequency trading services. Subpoenas issued to Nasdaq for records related to metamaterials bankruptcy. If you don't see what's happening, let me spell it out. The house of cards is teetering. High-frequency trading is a key tool for manipulating stocks, especially meme stocks like GME and AMC. Now Nasdaq is pulling the plug right as subpoena starts flying. Coincidence? I think not. And so this is what we talked about. This isn't just about one stock, this is about the market as a whole. The regulators and court might finally be catching up to what retail traders have been screaming out for years: systemic fraud. And if the algo-driven fake liquidity disappears, what happens when real buy pressure hits? Shorts might not have much time left. And this is something that we covered obviously yesterday again, but I want to focus on this and just have a deeper look into it. And the fact that this is something big that is happening. We talked about how right now things are falling into place. And we're going to be talking about more of this, of course, in the later end of this video. But we've already talked about how assets falling are going to provide liquidity difficulties for the short sellers, for the institutions. But now we're also going to see another of their edge being removed as we see high-speed trading services being removed. So the collaterals are gone. Now their high-speed trading are gone. You can see that there is really not much left for them. We've seen with the margin requirements. Now, had the short filing reporting being actually gone through and not delayed, that obviously would have been another blow towards the shorts, but we are already seeing a lot happening. And so this is what we talked about with how it wasn't going to happen all at once. We're going to be seeing things starting to kind of gradually crumble, gradually falling into place. And so we've seen, like, again, the buildup of the liquidity falling has been something that we've been seeing for a while. Now we're adding on top that they don't have this high-speed frequency trading, which they previously used to obviously suppress AMC, to suppress GME. And so that's gone as well. And you can also see this. XRT short interest increased to 454.22%. Are we close? So XRT is something that we talked about in the past before, where they use it to try and obviously short AMC and GME. And one of the biggest correlations we saw was when XRT was removed off of the threshold list, we actually saw AMC and GME go up. And that's because a massive amount of naked shorts are obviously gone. The sell pressure is gone. But then when XRT was back on to the threshold list, we actually saw AMC and GME getting suppressed again. So you can obviously see the relationship between the two. And now we're seeing it at a staggering 454.22%. And when you take a look at AMC, and you can see this as well, we're down another 1% today. But the thing that's interesting about this is when the overall market, the index, S&P, NASDAQ, when they fall, AMC falls with it. But yet when they rise, AMC don't rise with it, and it's actually met with a lot of seller. We covered this in yesterday's video where we talked about this two candles obviously showing the kind of the seller manipulation, the seller pressure that is happening. And so we can obviously understand why when NASDAQ and S&P goes up, why AMC doesn't go up. And that's obviously because of the fact we're seeing a 454.22% short interest on XRT. Now remember, this is just one of the many instruments they use to suppress AMC and GME. This is even to talk about, of course, we talked about with just the pure FTDs of AMC and GME, the options, the dark pools, the tokens, the swaps, and of course, so much more that are out there. But already with this, you can understand the sort of manipulation we are faced every single day. And you know what pisses the criminal naked shorting market participants the most? Is the fact that everyone is holding AMC and GME and won't let go. Their plan failed to levels nobody has seen before. And so despite what we've seen with a 454% short interest, with high-speed trading services, with how these collaterals are falling, how they used it previously to suppress AMC, the most important thing to understand is that no one's actually ever sold their AMC share. Or at least the net total of AMC is that there are more buyers than there are that of sellers. And that the people, the retail investors, the apes, the ones who hold the real shares of AMC have continuously held on to their shares, but not only that, have bought the synthetic shares that these short sellers have created, thinking it was only going to be a 1 month, 2 month thing, but we have held throughout the years. And so they are stuck with the fact that they have to fulfill the obligations of actually buying back these synthetic shares in the future. And so that's what they're worried about. And that's what annoys them. And so it's the fact that everyone is still holding and won't let go. And you can also see why the Fed don't want housing prices to come down. They have trillions in MBS. A lot of these have been purchased lately to bail out our banks who are going to fail. BlackRock also bought a ton to save the failing banks. So when the housing market falls, the Feds are hurting, and they already have 230 billion in debt to the Treasury. So commercial real estate, CRE, this is something that we have been on about for a while, and it's about understanding how this was a big form of collaterals used. And we are actually seeing this very market crumble before our eyes. But obviously what they're doing, what the Feds are doing, is that they are trying to save them. They are trying to bail it out. They're not trying to bail it out of, their own will. It's because of the fact of what's actually involved and linked with all of these values in collaterals that are in CRE. And so this goes on and back to what we've talked about with the fact that because of the fact the stocks are falling, because of the fact that liquidations are happening, the fact that they don't have high-speed trading, this is just another factor on top of what the shorts no longer have access to. They don't have access to reverse repo. They don't have access to the stock collaterals, that they have access to the commercial real estate collaterals. You know, we are seeing a lot of things that are not only limiting their liquidity, their capital, but also their abilities to actually suppress AMC. And that's why they're trying to do different things. And it's why we're seeing, again, XRT to have that 454% in short interest. It's because this is their desperate attempt to try and bring AMC and GME down. But yeah, guys, thanks for watching this video. I'll catch you guys next time.